So, for an investing beginner, let's talk a little bit about index funds, why you should buy them, and how to kind of identify the index fund that might be for you.
Okay, so when I first started investing, I learned a lot about ETFs, which is an index fund. And I took a sector that I knew was going to boom. Like I was looking around and looking at these different products like Apple, MacBooks, iPhones. I saw Tesla. I was looking at all these different innovative things, and as Microsoft. So I said, okay, well, let me go to that sector and find an index fund that I think is cool. So what I looked at first was the price point. How much money did I have? I'm not going to go and buy something that's at the $120 price point at that time. So I looked at FTEC, which was around $30, $40, in 2017, and I bought some. So I looked at what they had in the ETF, which is an exchange traded fund, and they had things like Apple, your Microsoft, your Johnson and Johnson, things like that, like all of your major key players. I believe Tesla's in there, and so I bought some. I also looked at the expense ratio because the difference between the mutual fund and the exchange traded fund is ETFs have a lower expense ratio because it's not actively managed like a mutual fund is. So it's cheaper. And then you can look at that asset allocation and see what companies that you're looking in and want to invest in. Also, there's a thing called a beta. If the beta is over 1, you know that it's volatile, right? If it's under 1, it's less volatile. Anything that's trading at 1 is perfect. So that's kind of what I was looking at. And I saw FTEC. It was at, I think the expense ratio was about 8 cents on the dollar. It was at $40. Perfect. Now it's sitting at 104. You know, that's a play. That's going to continue to grow over time. And you can find those index funds if you look and do your research. USA Today has a great money market, money news, sector that you can look at. But yeah, that's my take on index funds.
Yeah, man, just some examples of index funds, right? You have the SPY, right? And that has a piece of 500 of the top companies in the United States. Tesla recently got introduced in the S&P 500,
Yep.
right? Then you have SPY Growth, which has an adjusted allocation for growth stocks. SPY Growth is mostly tech dominant, so that's why that one's considered growth. Then you have VOO, right? That's the Vanguard ETF, and
Yep.
that one actually is tech dominant as well. Then you have FTEC, which is all tech, I believe, or
It's
mostly
yeah,
tech.
it's mostly tech. They have some other things in there, but it's a Fidelity trust.
Yes.
And so if you have Fidelity, you trade it for free. It's non-commission on there.
Okay, and then you have USO, which is a oil and gas ETF,
Okay.
right? So you just figure out what industry you like to jump in and diversify in, and you jump in that. Because the whole point of ETFs is diversification. And if you're a beginner investor, you probably don't know all the principles or even have an investing strategy, and it's very easy to just put money in the ETF and kind of walk away. Because the likelihood of you putting money in the ETF and half will be gone the next morning is very low. They have far less volatility than any single stock, right? So ETFs are a good way to go. And some people might say, "Hey, AT&T is an option." That's not an ETF, but that's a pretty stable stock that pays a great dividend.
Sure.
Right? Because that's usually trades anywhere between $28 and $31 always, right?
Right.
And pays a great dividend.
Yeah.
So for me, right, I have ETFs in some other accounts, but in my play account, I don't have any ETFs anymore. But where I store my value is in Broadcom because it pays a good dividend. And dividends help, right? Especially for a beginner investor.
Yeah, I definitely agree. Another thing to look at as a strategy. Now, if you are, you have been investing in those ETFs and you want to go to investing in individual companies, take that same ETF, look at what's in that asset allocation, and invest into it individually. That's just the perfect way to see what you want to do. Take the highest performers and put your money towards that, and do your own asset allocation within your portfolio and balance it out. That's how you could justify what's going on and also get involved in the individual stocks.
And another strategy is if you follow our page and you invest in the few stocks that we recommend and you hit a home run, like you invested in Plug,
Yep.
you've made, it's not worth $5,000. You made $2,500. You can pull out those profits, pull out that $2,500, and then you can put that into an ETF to keep your profits relatively safe.
Yep.
Right? Because the ETF will be far less volatile than Plug. Because if Plug dives, all you're going to lose is your initial investment. Well, rather, you pulled out your initial investment, you hit in the ETF, and all you're going to lose is your profits. And the likelihood of you losing 100% of your profits is low if you just kept $2,500 in there.
Right. No, I definitely agree with that. And if you're afraid to invest in EV and you want to invest in EV and have an ETF, there's one. It's really good. It's called HAIL, HAIL. It has NEO, it has Tesla, it has Plug, SPE, and all those. And it's a good way for you to get your feet wet in EV if you're risk averse.
Yes, sir. So, any more tips in regards to the index funds for the? Oh, wait. Some people ask why index funds versus a mutual fund.
Right. So, kind of like what I mentioned, it costs more to own mutual funds.
Commissions.
Right. Because of commissions. On top of that, it takes $2,500 most times to get involved in a mutual fund, so you got to pay more. Also, mutual funds don't trade daily or during the day. You get the price at the morning and then the price at night, so you don't really get to trade it like a stock. Another thing is it's actively managed, so that would be a pro for the mutual fund and a con for the ETF, but at least you can see the price moving up and down and you can kind of get in, get out, and I just think they're both safe bets. And I believe a mutual fund has other securities in it besides stocks.
Yes.
And so they try to bring in all these securities to specifically beat the market. That's the difference.
Yeah, and also, you don't, with a index fund, you don't have to worry about an account manager that's worried about taking out profits to, one, pay themselves, and two, impress the group, right?
Yeah.
So, yeah, man. Personally, I'll take an index fund over a mutual fund any day.
Same here.
Cool, man. Well, that rounds out that topic for investing for beginners.